morning, it's Simon Clark from American Lithium here. I'm the CEO of American Lithium, and I'm here to talk to you about compelling reasons why American Lithium makes a lot of sense to be added to people's portfolios at this time. We were set up really with a vision to drive forward on the whole critical mineral sides in the US. Lithium is very much a needed product in the US. The production in the US is tiny compared to what their demand is. And as you can see from the slide there, that's just going to grow. So very much focused on the US supply chain. We've seen lots of incentives, lots of momentum coming from the US government to help accelerate that process. And you can see the kind of numbers that are needed in terms of the supply of lithium carbonate. And that's even more pronounced on the domestic side. And with that, we have two extremely large world-class assets. We have TLC in Nevada, we have Falchani in Peru, both of which have large resources. TLC is the second largest claystone and actually the second largest resource in the US. Falchani is the sixth largest hard rock deposit in the world, and we think it gets a lot bigger from here. Both of them critically produce a high purity lithium carbonate product through their flow sheet. They can be converted to hydroxide as required. The beauty of that is you don't need to ship the product to China or anywhere else for upgrading or refining. And I think that's going to become a critical piece as we move forward and look to, in the short to medium term, bring on significant supplies of lithium that can de-risk the supply chain from overseas countries like China. And I think these two are perfectly positioned for that. And I think the timing is perfect for people to get into the market. We've seen lots of strategic interest, lots of end users, lots of car companies and other OEMs start to get into the space. That has not yet fully translated into the capital markets. And I think a lot of companies like us remain undervalued given the strategic interest that is out there. And, you know, where we sit, you can see just adding up the net asset value of our projects, we're well over 5 billion, and yet our share price is 500 to 600 million Canadian today. So lots of room for growth, lots of milestones. You can see a snapshot there of our cap table. We're roughly at 270 stock price, roughly 600 million market cap. Strong cash balance. We've got strong marketable securities as well. We made a very interesting strategic investment into a company called Surge, which is another claystone mineral that we're pretty excited about, in addition to our core projects. We also have a lot of warrants that help make us somewhat self-funding. So a proven leadership team. Andy Baring at the top was one of the key founders of Millennial Lithium, sold last year to Lithium Americas. I was part of the team at M2. We have a very strong independent board, headed by Claudia Tornquist on the audit side, and a technical team that I think understands lithium projects and discovered Falchani and has really helped us unlock the value at TLC and shown the potential economics from that project. So a very balanced team technically and also from a company builder perspective, with a very strong GM in Peru, Ulysses Lapa, and the strong team in Tonopah. So I think we're very well positioned. And if we move forward one here, you can see the development path. I think really what's going to bring us from our 0.1 times NAV valuation today to the median of 0.5 times NAV, I think it's going to be milestones as we start to see in Peru more stability. We're starting to get real traction in our drilling down there. Some very interesting drill results announced this week. And we are in the process of updating the Falchani resource and PEA, which are key steps on the way to having a pre-feasibility study finalized by the end of the year. And it's going to show a very large increase in NAV. It's going to show just the strength of this project and that we have a flow sheet that's baked and ready to go. And in Nevada, a very robust maiden PEA announced earlier this year that we're now building on. We've drilled a lot of core that's now ready to go and help us finalize the flow sheet again for PFS, and drilling ongoing at both places. So exciting times. On top of which, we also have a world-class uranium asset that gives us optionality. We've announced the decision to spin that out. We won't be rushed into that. We'll do it at the right timing of the market, but it will be wholly for the benefit of American shareholders of record. So again, just summing up, large world-class assets, well advanced, both with the potential to start production over the next several years and really help the deficit that we're seeing in the lithium supply side, both strategically located in strong mining jurisdictions. Both, we believe, will feed the domestic supply chain, which is crying out for this mineral, and a team that we've really rounded out technically and at the senior management side. Lithium momentum continues to be as strong as ever, and I don't think we're going to see that slow down. And as I mentioned, lots of near-term value drivers to close that gap between our market rating today and to where it should be if we get to the mean of where our peers are traded. So I think, again, a really great opportunity for people to get into the lithium space at a key time in the market and really what I see as an inflection point. And I think we would be one of the best choices out there, given, again, where our rating is compared to our peers.